Good morning, students. Welcome to this discussion on accounting standards. So today we are going to start with revenue. In terms of revenue, there are a couple of standards that we are going to cover. One will be on the construction contracts and the other one will be on the revenue recognition. So let me just give you a brief perspective about it. So what I'll do is I'll just quickly share a working file with you. Therein I'll give you a brief perspective as to how this revenue recognition is required to be looked at, how this is required to be approached, and then we'll begin our discussion with one of these accounting standards. Okay, so whenever we talk about revenue recognition, now in relation to revenue recognition, we can say there are two ways this can be looked at. One, in respect of contractors. Okay, so means how the contractors will recognize their revenue in respect of construction contracts. For this, the relevant accounting standard is AS7. Okay, and for other than contractors, means if there are parties which are other than contractors, then for such parties, for such transactions, for such type of contracts, the relevant accounting standard will be AS9. Okay, so this is how revenue recognition is required to be looked at. So broadly, we can say there are two accounting standards which are dealing with the recognition requirements of revenue. All right, so now what we will do is, to begin with, we'll start our discussion with AS7. Okay, so let me just take you to AS7 now. Now AS7. AS7, as we have already touched upon this is all about construction contracts. And I'm hoping that you know the perspective around it. Now, in this case, or in case of AS7, we can say there are a couple of things that we need to look at to begin with. One, what is this construction contract? Yes or no? Because till the time we are not clear on the construction contract, we'll not be able to understand the various requirements in relation to this. So let's try to understand the meaning of construction contract so that we can have a clarity as to which all types of contracts, which all type of transactions are going to be covered within the purview of AS7. All right, so now as per the standard, a construction contract is a contract which is specifically negotiated for construction of an asset or a combination of assets that are closely interrelated or interdependent. Now, these 2 points are very, very important. One, we are dealing with a contract for construction of an asset. Second, those assets or those combination of assets should be interrelated or interdependent in terms of their design, technology, function, or their ultimate purpose or use. Yeah. So now, in relation to the construction contract, we can look at some of the examples. Bridge. So if you talk about construction of a bridge, building, if you talk about construction of a building, dam, pipeline, road, these are all examples of those assets whose construction will take substantial period of time. Now, please remember a substantial period of time. Now, substantial period of time is not really defined, but for the purposes of accounting, for the purposes of this accounting standard, 12 months or more is considered to be a substantial period of time. So that is how this is required to be looked at. Now, these are some of the examples which will fall within the purview of those assets for which the construction will get covered under this construction contract. Okay. Now, when it comes to the construction contract, now who will take up this construction contract? Contractor. Please remember a contractor, because contractor is going to be the person, party, entity who will take up the construction contract. So that's why it's the contractor who will recognize revenue in relation to the construction contract. And for that revenue recognition means revenue recognition in the books of contractor. That is something which gets covered within the purview of AS7. Okay. That is something which gets covered within the purview of AS7. Yeah. Now, in relation to these two types of contracts, there are two types which are possible. Now, first requirement was that for any entity to fall under AS7, what is the requirement? It should be a contractor dealing with a construction contract. So we discussed as to what is a construction contract and which all entities therefore will get covered under this. Now, when it comes to the construction contract, now those construction contracts could again be of two types. So we are now going to look at those two types. Now, what are those two types of the construction contract? One, we can say, is a fixed price contract. Fixed price contract. Now, what do you mean by fixed price? As the terminology suggests, fixed price means the contract wherein the price is fixed. For example, revenue is rupees 100 crore. Now, irrespective of the cost which is incurred, what is the amount involved? Rupees 100 crore. Yeah. In this case, the revenue is fixed. Revenue is not varying. And that's why this is called as a contract in which the consideration, in which the amount of revenue is already fixed. Okay. Now, as against this, there could also be another type of contract. Now, what is that another type of contract? Cost plus contract. Now, how is this different? What is the meaning of cost plus contract? Now, there again, as the terminology suggests, cost plus contract means a contract wherein the cost which is incurred by the contractor will keep changing or may change, on which a top up is provided to the contractor. For example, say the contract is that actual cost incurred plus 10% markup. Means if the contractor will incur a cost of rupees 100 crore, then what will happen? On this 100 crore, he will get a margin of 10. He will get a margin of 10%. I think somebody is not on mute. I would request you to please stay on mute. I would request everyone please stay on mute. Huh? All right. So now when it comes to cost plus, so we discussed in this case, the amount of revenue may keep changing. Why? Because it will be dependent on the cost which is incurred by the contractor. For example, if the cost incurred is 100 crore, then what will be the amount of revenue? 100 crore plus 10%. That means 10 crore. So this will become rupees 110 crore. Similarly, if the cost incurred increases to 200 crore, now because the contract says it's cost incurred plus 10%. So can you tell me what is going to be the 10% markup in this case? Over to you, everyone, quickly. What will be the markup in this case? Okay, great. Om and Abhishek are saying 20 crore. Very good. Yes, because it's 10%. So that's why this markup will also keep changing. Yeah, same is the response from Pooja. Very good. So in this case, this will become 20 crore. Therefore, the amount of revenue will become 220 crore. Okay, though such type of fluctuations will not arise, but idea is to understand the nature of the contract. Now, in one case, when it comes to the fixed price, so we said that the amount of revenue is fixed. But when it comes to cost plus, so what does it say? The cost is something which the contractor needs to maybe sort of provide, or 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 the revenue is something which is dependent on the cost incurred by the contractor. Okay, yeah. So now there are a couple of things that we have discussed so far. One is what is a construction contract. Second is types of construction contract. Any questions, any doubts if you have so far? Yes, over to you. Any questions, any doubts? Pooja is saying revenue is a variable. Yes, that's correct. In a way, that becomes dependent on the cost incurred. So that's how this contract arrangement works. Any questions, any doubts so far? Quickly, please. Over to you. Any questions from your side? Any doubts? No? All clear? Okay, great. Om is saying he's clear. Very good. What about others? Everyone clear on this? Yeah? All right, great. So we'll move further. Now, moving further, let's try to understand that in terms of revenue, what all types of components may arise. Okay, so we are not talking about the contract right now. We are saying that when it comes to the revenue, which will be specified in the contract, now which all elements could be included in the revenue. So let's try to understand that part. Okay. Now, first, it says contract revenue should comprise initial amount of revenue agreed in the contract. Initial amount means, so let's suppose when you begin with a contract, when you start with a contract, so an X amount is mentioned in the contract. Say rupees 100 crore, rupees 10 crore. So whatever is the initial amount that has been mentioned in the contract. Okay. So what is the first component? Let's suppose as per the contract, revenue is 10 crore. Now we are not saying whether it is fixed or cost plus. Irrespective of the nature of the contract, we are saying what is the first element or what is one of the elements which is possible, amount which is mentioned, 10 crore. Okay. Now, another component which may arise is a variation in the contract's work, claims, incentive payments. Okay, so let's try to understand it through what are these. Sometimes what may happen is maybe during the course of the work. Now, please understand, it's a long-term project. It's a long-term contract. It's not something which will get completed within a day or two or maybe within few weeks. Generally, these projects are stretched over a long period, maybe 3 years, maybe 2 years, yeah, maybe 4 years. And during this period, some of the variations may be required. Maybe initially it was agreed that maybe some part will be done in a certain manner, but subsequently that has got changed. Okay. Or maybe while constructing the road, it was decided that one more stretch will be required. Yeah. So such type of variations may arise in the contract. So if those variations will arise, then what will happen? Additional money will be required, additional payment will be required. That is what you call as variations in the contract work. Okay. or claims against that. At times, incentives could also be included. Incentives could also be included in the contract. Now, what do you mean by incentive? Incentive means any sort of reward or benefit which is provided to the contractor. Say, for example, contractor has been told that the work should be completed within 2 years. Okay, so that has been the arrangement that the work has to be completed within 2 years. If the work gets completed before 2 years, before time, then some incentive will be provided to the contractor. Okay, so this is also one of the element in relation to revenue which could be there in the contract. Yeah. Now, another type of element which could arise could be just contradictory to this incentive. Now, similar to incentive, there would also be penalties. Now, what do you mean by penalty? So initially, let's suppose there was a arrangement between the parties that if you complete the work within 2 years, it's okay. If you complete before 2 years, so the contractor will get a reward or an incentive. But if that is delayed beyond 2 years, if that is delayed beyond 2 years, which is not within the which is within the control of the contractor. Let's suppose contractor has delayed, because of which the work will be completed within 2.5 years. So what will happen? A penalty will be charged from the contractor. So that may also exist. So these type of clauses may also exist within the contract. Okay. Another very common element which could exist in the contract is cost escalation. Now, please try to understand what is this cost escalation. Okay, now this is very important and very practical, and very commonly we get to see this cost escalation. So let's try to understand what is the meaning of cost. So let's suppose the contract was required to be completed within 3 years. 1, 2, 3. So initially it was agreed that the project will be completed within 3 years. And what was the amount of contract? 50 crores. Forget about variation, incentive, penalties for the time being. Okay. And now what has happened? Let's suppose there's a situation like Corona, or let's suppose there are some situations because of which the work has stopped. And that is something which the contractor can't control. Yeah. Many a times problems may arise. Yeah. Now, because of which work is getting delayed. So let's suppose 3 years are gone by. Contractor is working efficiently, but still the work is getting delayed. Okay. And it's been 2 years. Okay. 2 more years are required to complete the work. Now, over a period of time, what will happen? Due to inflation, will the cost increase for the contractor? Tell me. Due to inflation, will the contractor be subject to increases in the cost or not? Tell me, what do you think? Over to you quickly. Om says yes. Arin says yes. Yeah. And I think same is the response from Shoaib and Abhishek. Very good. Now, because of these increases in the cost, should the contractor be compensated or not? Yeah. I think same is the response from Pooja. She says yes. Great. Now, these type of increases in the cost are compensated to the contractor through this clause, which is called as cost escalation. So what may happen is that the contractor will reach out to the customer that I have been incurring significant costs over the period due to this delay, and which is not due to me, which is not something I can control. That is beyond my control. That is beyond my control. And that's why I should be compensated. So now for this, there's a clause which says cost escalation. So if the cost will get escalated, revenue may be increased. Now please remember one point. that when it comes to revenue recognition, okay, so we are talking about recognition of this initial amount. We are talking about recognition of variation, incentive, penalty, cost escalation. So what will become the basis for this revenue recognition? See, as far as this initial amount is concerned, this is something which is already agreed between the parties, means the contractor and the customer at the beginning. So that's why, as around this initial amount, there is absolutely no problem in terms of revenue recognition. But please remember, any variation, any incentive, any cost escalation, even though these are mentioned in the contract, they are always subject to discussions. They are always subject to approvals. Why? Because it may happen that the contractor is asking for 10% increase. Okay, but the customer is not convinced. Customer may say that, okay, I'm okay to pay you for the escalation, but there is no so much increase. It should only be 5%. So what will happen? There will be a discussion. There will be a negotiation. Yes or no? Tell me, will it involve any sort of discussion, negotiation between the two parties? Yes or no? So let's suppose if you were the customer and if the contractor reaches out to you, so will you agree immediately? Tell me, what do you think? Will you agree immediately? So if let's suppose I am the contractor and I am saying that, okay, I'll want to apply this escalation clause and please pay me 10% extra. So will you agree? Pooja says no. Yeah, Abhishek says no. Approval is required from the customer. So that's why all of these clauses, all of these elements, means variation, cost escalation, claims, incentives, because they are subject to approvals. So that's why revenue in relation to these elements is always recognized only when it is approved by the customer. Okay, please remember, only when this is approved by the customer. So we are not saying that the revenue will not be recognized, but its time frame is something which is required to be looked at. So it should not be done immediately, or it should not be done the moment the contractor is saying that this is my escalation or this is the variation. No, till the time it's mutually agreed between two parties, it should not be recognized. Okay, clear on this? I think Ishwar had the same answer. Very good. And Sejal says ultimately the cost is required to be incurred by the customer. Yes, that's correct. But again, the point is that when is that agreed by the customer? Okay. And what amount is agreed by the customer? That's how it's required to be looked at. Okay. Great. So any questions so far? Any doubts if you have? Quickly. Any questions? Any doubts if you have? No? Everyone clear so far? Yeah? Everyone clear? All right, great. So now let's move further. Now we will be discussing the elements of the contract costs. Okay. So at the first place, what did we discuss? What is a contract? And in the contract, there are two things: contract revenue, contract costs. So for the contract revenue, we understood what are the various elements. Now for the contract costs, we will understand what are the various elements. Okay. Now, let's think of a building. Now, the best way to understand this aspect will be with the help of an example. Bhargav, I would request if you can just stay on mute. Bhargav, if you could just stay yourself on mute, please. Please stay on mute, because there's some background noise. Thanks. Okay, great. All right. So now moving to this contract costs. So now in relation to contract cost, as we discussed, that the best way to understand the elements of cost will be through visualization. So let's take an example of building. Okay, let's suppose building is getting constructed. Yeah. So now, if let's suppose building will be constructed, so what all costs will be incurred? Let's think about it. So one, building material will be required, labor will be required. Yes or no? Then some equipment will be required, machines, etc. So either they will be hired, means they will be taken on rent, or if those are owned by the entity and used for construction of the building, so those equipments, machines will be depreciated. Yes or no? Yeah. Shoaib is saying legal requirement. Of course, we'll come to that part also. So now for construction of the building, some technical assistance will be required. Means somebody who can guide as to, how technically this should be constructed in terms of its design, all of those aspects. Assistance of technicians will be required. Consultants will be required. Yeah. Now these are all costs which are specific to the construction of the building. So we can say those costs which relate directly to the specific contract. Now similarly, there could be some costs which are attributable to the construction of the building in general. For example, now during the construction, if let's suppose a loan has been taken, why? For construction of the building, let's suppose 20 crore will be spent, money is not enough. So that's why you go to the bank and take the loan. Okay. Now on that loan, interest cost will arise. Let's suppose this building is also insured. So insurance cost is incurred. Yeah. Similarly, there could also be some other costs which are specifically chargeable to the customer. Yeah. So maybe in relation to the construction, if let's suppose some other labor is hired or some other element is involved for which some costs will be incurred. So what will happen to that? All of those costs, because they are incurred in relation to the construction of the building. So that's why what should be done? They will all form part of the cost of construction of building. Okay. But if let's suppose during the construction of the building, the entity starts marketing of the building. Marketing means they want to sell the building. They want to carry out its advertisements. So do you think that marketing cost has got anything to do with the construction of the building? What do you think? Would you say that such marketing cost is incurred in relation to construction of the building? Can we say that? Tell me, over to you. Om, Abhishek, they are saying no. So should that cost be forming part of the cost of construction of the building? Tell me, should that cost be forming part of the cost of construction? Om says no. Abhishek says no. Sejal says no. Very good. So that's why any selling cost is excluded. Similarly, if there is any other cost, forget about selling cost. If there is any other general administrative cost, okay, research development cost, which is incurred, but which is not attributable to construction of the asset, then such type of costs, what do you need to do with that? They will not form part of contract costs. They will be excluded from the contract costs. Clear on this? Clear on this? Yeah. So there are a couple of aspects that we have discussed. Yeah. As to what will be considered and what will not be considered as far as the consideration of costs of asset is concerned. Now, what is that asset for which the revenue recognition is under consideration. Okay. Any questions, any doubts if you have so far? Quickly. Any questions, any doubts so far? Over to you. Okay, Abhishek is asking, sir, what about dismantling cost? See, dismantling has got nothing to do with construction of the building. Okay, so that's why such a dismantling cost will not get covered over here. Yeah. Okay, Shoaib seems to be clear on this. Abhishek is now clear. Great. What about others? Okay, Om is also clear. Great. So now moving on to one more aspect around the construction contracts. Okay, after which we'll start discussing some examples also. So what I'll do is I'll just take you to your study material now. And in that study material, we'll pick up something. Okay, so there is a concept which we call as combining or segmenting of a contract. Combining and segmenting of contract. So please remember, the moment we use the term contract, it's all about construction contracts. Yeah, because it's all within the purview of AS7 right now. Yeah, I think Sejal has a query. Okay, so before we get on to that, so Sejal is asking, sir, please explain escalation treatment. See, escalation is what? If the cost is incurred in addition to what the contractor has estimated. Let's suppose initially when contractor and the customer entered into a contract, okay, the contract revenue is 20 crore. So the contractor estimated his cost will be 15 crore. Okay, and the project is for 3 years. But now the project is getting delayed. It's been 5 years, work is not yet completed. Why? It's not because of the contractor. Maybe there are some delays, maybe there's some natural calamity, it could be anything. Huh? The work is not getting completed and it's beyond the control of contractor. So now over a period of time, because the period is significantly gone by, so that's why, because of this delay, because of the passage of time, will the contractor become subject to cost increases or not? Because of inflation, will his cost keep increasing or not? Because the work is not completed, so if he'll have to complete, so he will be incurring more costs or not? Tell me, what do you think? Sejal, quickly, what about you? Tell me, do you think will that happen or not? Quickly, yeah. Abhishek is saying increase in material cost will rise. Of course, it's not only about material cost. Each and every cost will become subject to increases. Yes or no? So Sejal is also saying yes. So that's why what will happen is initially the contractor estimated he'll spend 15 crore. So he'll make a profit of 5 crore. He'll make a profit of 5 crore. Yeah, so let's just go to a working file to understand this. So initially, what was the thought of the contractor? So contractor was thinking that he will complete the work after 3 years. 20 crore is the revenue. He will incur a cost of 15 crore. He will make a money of 3 crore. But now, if let's suppose there's a cost increase, maybe the costs have increased considerably and he is estimating that he will end up incurring a cost of 20 crore. So will he make so much money? The answer is no. So what will happen? The contractor will reach out to the customer and will demand for increase in the cost. How? By increasing this revenue. So he'll say my cost has gone up significantly. So that's why I want this revenue to be increased. I want my consideration to be increased. That is what you call as cost escalation clause. Okay. Now the point is that as far as this 20 crore is concerned, this was fixed. This was fixed. So no doubt this 20 crore of revenue should be recognized. Okay. As around this 20 crore, there is absolutely no problem. Yes or no? But when it comes to this 20 crore plus X, now whether that X is 1 crore, 2 crore, 5 crore, 6 crore, we don't know. Whatever is that amount. Can we recognize this X immediately? The answer is no. So when should this X be recognized? This X should be recognized only when it is approved by the customer. Or you can say when two parties have mutually agreed for this. Now, who are the two parties? Now, who are the two parties in this case? So one is the contractor and the other one is the customer. Okay. Now, as far as 20 crore is concerned, this is absolutely okay. Why? Because this is already agreed. This is done and dusted. But as far as that increase, now this is subject to discussions. So that's why this should not be recognized immediately till the time this is mutually agreed. Understood? Yeah. So Sejal says only when customer approves. Yes. So we can say once there is a mutual agreement. Okay. And why is that important? Let's try to understand. Because you may be thinking, but sir, how can we keep delaying this? Because as around this X, we are not clear. Let's suppose contractor is demanding 5 crore. But the customer is saying, no, I'm happy to pay you 2 crore. Now, what will become the basis then? There's no basis available. Understood? Yeah? Okay, great. So Sejal is clear on this now. Very good. All right. So now moving further. Okay, so now we will just go back to that concept of combining and segmenting of the contract. Now, what do you mean by combining and segmenting? See, the standard says at times there could be two contracts. At times there could be two contracts which you need to club, and you don't need to consider them as two contracts. You need to consider them as if it's one contract and recognize revenue on that single contract. And at times there could be a single contract on which revenue is also one, but it may involve various obligations, performance obligations, on the basis of which you need to divide it into those performance obligations and recognize revenue for each and every performance obligation separately. So let's try to understand this. Okay. And what we will do is we'll just pick up one example. With the help of that example, we'll try to understand this. Okay. XYZ Construction Limited is a construction company which undertakes construction of an industrial complex. It has separate proposals raised for each unit to be constructed in the industrial complex. Now, please remember, it has separate proposals raised for each unit to be constructed in an industrial complex. Since each unit is subject to separate negotiation, he is able to identify the costs and revenues attributable to each unit. Should XYZ treat construction of each unit as a separate construction contract? So let's try to understand this. In this case, XYZ is required to treat construction of each unit as a separate construction contract. Okay, so that's the answer. Now, what we will do is, we'll just try to elaborate this. Okay, discuss this further as to how this is required to be really looked at. And then we'll come back to this solution again. Okay, so what I'll do is I'll just try to sort of create a pictorial presentation. So let's suppose there's a contract which is under discussion. So what is the contract? So there's a contractor, C Limited. And who is the customer? Let's suppose there's an authority. Authority is the customer. Authority has invited bids. Authority has invited bids. For what? There are three works which are required to be completed. One, construction of a road. Let's suppose for 2 kilometers. Okay. After that, construction of a flyover for 1 kilometer. And the third work is construction of another stretch of road for 3 kilometers. Okay. Now, for administrative purposes, please understand, for administrative purposes, for convenience purposes, what has happened? Authority has invited bid from various customers, but for each of these works separately. So when I say each of these work, this is work A, this is work B, and this is work C. So three bids are required to be submitted for each work. Okay, for three works. Okay. And when the contractor is looking at the costing, he's looking at his budgeting. Of course, if C Limited will submit the bid, so what will he do? He will discuss his cost. He will understand his cost. That's how C Limited will approach this. So C Limited will try to understand as what is the cost he'll incur on this work. What is the cost he'll incur on this work? What is the cost he'll incur on this work? Yeah. So what has happened is C Limited has looked at all of these three in a combined manner. So that's how budgeting has been done by C Limited. It's on a combined basis. It's on a combined basis by C Limited. Eventually, when the contract is awarded, so what has happened? Contract will be awarded to one party for all the three works. So it will not happen that work A will go to one party, B will go to second party, or C may go to third party. No, the work will go to one party only. All three works will go to one party only. But here again, for some administrative convenience, what has happened? Authority has awarded three contracts. So let's suppose for this 2 kilometer stretch, the contract amount is 10 crore. For this flyover, let's suppose the contract amount is 8 crore. And let's suppose for this stretch of another road, contract amount is say 12 crore. Okay. Now, all in all, can you tell me what is the overall amount which is involved in the contract? Over to you. What is the overall amount involved in the contract? Over to you quickly. 30 crore. Great. Shoaib Om says it's 30 crore. Great. So all in all, the amount involved is 30 crore. Now in this case, if you go by the legal arrangement, if you look at the legal aspects, so what do you find? There are three contracts. Contract A for 10 crore, B for 8 crore, C for 12 crore. So what will become the basis of revenue recognition if you go by the legal arrangement? Once the work for A is completed, C will recognize 10 crore. Once the Work for B is completed, C will recognize 8 crore. Once the work for C is completed, C will recognize 12 crore. Yeah, that's how it should happen. But if you apply AS7, what does it say? AS7 says that in this situation, you need to find out that even if there are three contracts, for the purposes of accounting, please remember, even if there are three legal contracts, for the purposes of accounting, should you consider all those three contracts as a single contract? Means, should you combine them and recognize revenue on these three contracts in a combined manner or not? So if you do that, that is what you call as combining of contracts. Combining of contracts. Now the point is that how do you assess that? How do you assess that? Standard says you need to understand whether each of these works, are they interdependent? Are they interrelated to each other? What does it mean? It means that tomorrow, if C completes contract A, if C completes contract A, okay, and now C is not interested in completing contract B and C, he wants to move out. He says, no, I don't want to work on contract B and C. So will that be permitted by the authority? In such a case, will the authority make the payment to C or not? If not, then what do you say? In a way, all the three contracts are interlinked. They are linked to each other. Means till the time contract B and C are not completed, A will also not be considered to be completed by the authority. Who is the authority here? Customer. Authority is the customer. But if you say that C can complete only A and can walk out, it's okay. Then it's not something which is linked to B. It's not something which is linked to C. In that case, you should not be combining them. Even if one contract is awarded by authority for all three works, wherein the amount is also 30 crore specified. So in that case, what can you do? You can segment that into part A for 10 crore and recognize revenue for 10 crore. So this is what you call as combining and segmenting of contract. And depending on whether you segment or combine, your revenue recognition will be accordingly changed. Understood? Everyone clear on this? Any questions, any doubts? If you have, please let me know. Everyone clear on this? Quickly, over to you. Any questions, any doubts? Om is clear, Pooja is clear. What about others? Any questions if you have? Okay, Malu is also clear on this. Great. Darshan is also clear. Great. So it seems you know the concept, huh? And it's a good revision then, hopefully. Huh? Very good. Great. So, all right. So now what we'll do is we'll just move further. And what I'll do is I'll just come back to that example. Okay. Hopefully you should be knowing as to, what was the basis of concluding on that previous example that we took up in the study material. But I'll just go back to that example and we'll just go through that once again. And hopefully you will now be able to answer as to what will be the basis of this required treatment. Okay, why that has been treated as a separate contract. Okay, so we already know the solution. I just want an explanation from you as to, why it should be a separate one. Okay, so I'll just quickly read through this once again. XYZ undertakes construction of an industrial complex wherein separate proposals have been raised for each unit to be constructed. Since each unit is subject to separate negotiation, costs and revenues for each unit are identified separately. Now the question was, should XYZ consider this entire complex as one unit and recognize revenue for construction of entire industrial complex, or should that entire industrial complex be broken into various units? So once a particular unit is completed, that's how revenue recognition should be done for that particular unit. Okay. So the answer was that it should be broken down into various units and revenue for each unit should be recognized separately. Now, my question to you is, what is the basis of making this conclusion? Yes, over to you. Quickly, what is the basis? Please remember, in the exam, you will not only be required to answer yes or no. You will also be required to justify, explain. Yes. Great. Shoaib is saying, because there is a separate proposal for each unit. Separate negotiation was involved. Yeah. And Om is adding to this answer of Shoaib. Om is saying the revenue for each unit, cost for each unit is also laid out very clearly. So that's why we should be considering each unit as a separate contract. Yeah. Anything that you would like to add to this? Over to you. Anything you want to add here? Okay, Sejal says because there are separate proposals. Yes, that's absolutely correct. Anything else you'd like to add here? Over to you quickly. Yeah, so everyone clear on this so far? Yeah, everyone clear? Okay, great. All right, so let's move further. All right, so let's move further. So now what we will do is, we will get on to the recognition of revenue. Okay. Now, in relation to recognition of revenue, let's try to understand basic aspects as to how the revenue should be recognized. So the standard says that the revenue should be recognized based on percentage completion method. Now, what do you mean by this? Percentage completion method. It means recognize the revenue and expenses having regard to the stage of completion of the contract. Okay. Now, this is very interesting. Further, it says any expected loss on the contract should be recognized as expense immediately. Means if you are expecting that on the contract any loss will arise, then let's not wait for that loss for the period to be completed. No, recognize that upfront immediately. So what I'll do is I'll just pick up some small examples to understand this concept. Okay. Now, what is the stage of completion? What is this percentage completion? Let's try to understand all of those aspects. Okay, so now, see, when it comes to a construction contract, so we discussed that construction contract is not for a small period of time. Yes or no? We understand that the construction contract is for a fairly significant period of time. It's a substantial period of time that is involved. Generally, a period of minimum 2 to 3 years is involved. Generally, yeah. Okay. Now, let's suppose a building is getting constructed. And let's suppose it is expected that its construction will take 3 years. So what is the consideration for the construction of the building? Let's suppose it is 30 crore. Okay. Now, my question to you. We understand that the building will be constructed in 3 years. Okay. Or we can say 3 financial years. Yes or no? Now the question is that is it possible for the contractor to complete the construction in 1 year? What do you think? Will it be possible for the contractor to complete the construction in 1 year? Pooja says no, not possible. Okay. So if the construction cannot be completed in 1 year, tell me one more thing. Will there not be a situation that in the first year, the work will be going on? In the first year, the work will be going on. Means it will be work in progress. WIP means work in progress. And at the end of the year, at the end of the year, 31st March will come when you will have to close your books of accounts. When you will have to close your books of accounts. In such a situation, what will you do? Because in relation to this construction of building, some part of the construction will be completed. So we are not saying that construction will be completed. We are saying some part will be done. Some part will be done. Means some cost will be incurred. A part of the cost will be incurred as at the end of the first financial year. So now, tell me one thing. How will you treat that cost? Over to you. What are your thoughts? At the end of first financial year, you know that the building is not completed. Yes or no? And you also understand that there's no possibility to complete the construction. But there's no doubt that some cost, some part of the cost as around this construction will be incurred. So Pooja says recognize revenue only in relation to that part. Shoaib says contractor may recognize its revenue based on cost incurred till reporting date. Very good. So this is what you call as percentage completion method. Okay. Now in this case, let's try to understand the concept. Revenue amount is what? 30 crore. Let's suppose it is estimated that over a period of 3 years, total cost will be 25 crore. Let's suppose it is estimated that over a period of 3 years, total cost to be incurred over a period of 3 years will be 25 crore. Okay. Now, if at the end of first year, a total cost of 5 crore is incurred. If at the end of first year, a total cost of 5 crore is incurred. Yeah. In such a situation, what will you do? In such a situation, what do you say? What part of the cost has been incurred? Tell me. Out of total 25 crore, if 5 crore has been incurred in the first year, what do you think? What part of the cost is this? Shoaib, Abhishek, they are saying 20%. Very good. So how do you compute 20%? So you are applying the formula. So you are saying actual cost divided by total estimated cost. Correct? Yeah. Basis which you are saying that in the first year, 20% cost has been completed. 20% cost has been incurred. Okay. So the standard says that for this entity in the first year, because this entity has incurred some cost, so that's why it should also be recognizing the matching revenue. Matching concept you understand? Yeah. So it should also be recognizing the matching revenue. So what will become the basis for recognition of that matching revenue? Standard says that consider the percentage of work completed. Okay. Over a period of 3 years, 100% work is required to be completed. So over a period of 3 years, what will you do? You will recognize revenue equivalent to 30 crores. And this will be spread out over a period of 3 years. So what will become the basis of spread out? Percentage of work completed. Now, what is the basis for a determination of percentage of work completed? One basis happens to be this: actual cost divided by total estimated cost. Okay, this is one of the basis to determine percentage of work completed. This is one of the basis. Okay, and considering this, what will you do? Considering this, what will you do? Considering this, you will say that because my work is completed to the extent of 20%, so that's why in the first year, like Pooja just mentioned, and I think there's one more response coming in, like Sai also mentioned, you should be recognizing revenue equivalent to 20% in the first year. So that's why in the first year, what do you do? 30 crore into 20% means 6 crore is the amount of revenue which you should recognize. This is what you call as percentage completion method. Any questions, any doubts if you have on this, please let me know. This is what you call as percentage completion method. Okay, in case of percentage completion method, what will you do? Year on year, you will determine the percentage of work completed. And depending on the percentage of work which has been completed, what will you do? You will recognize revenue. Why? Because you can't wait for 3 years to complete and then recognize revenue. And you can't recognize revenue in the first year itself. So that's why some mechanism is required to be considered. And what is that mechanism? Percentage of work completed. Or you can say stage of completion. That's one and the same thing. Huh? Stage of completion, percentage of work completed, they are all interlinked. They are all one and the same thing. Okay. So any questions, any doubts if you have up to this, please let me know. Over to you. Any questions, any doubts? Shoaib is clear on this. Any questions, doubts? No? No questions? Sure? Everyone clear? Great. Pooja is also clear. Great. Now, if you look at the requirements of the standard, standard says that revenue will be recognized based on percentage completion method. We discussed this. What is percentage completion method? And in relation to percentage completion method, we also understood that there's a requirement to determine stage of completion. We need to determine this percentage of completion or stage of completion. Okay, so that's the requirement that we have. And we also looked at one of the ways to find this. But is that the only way? The answer is no. So let's try to look at some more methods. Okay. Now, this is not the only way. So if you have to determine the stage of completion, the percentage of completion, so standard gives you certain methods. Now, what are those methods? Standard says one method is you can go and physically verify that, physically evaluate that. Physically evaluate that means forget the percentage of cost for the time being. Go and check that physically. On the basis of that method, on the basis of that assessment, what do you think is the percentage? If you say it's 20%, recognize revenue equivalent to 20%. If you say it's 30%, recognize revenue equivalent to 30%. Similarly, you can do survey method. Okay, you can perform survey in relation to that work and determine the percentage of work completed. If that comes out to 20%, recognize revenue equivalent to 25%. Okay. And the third and the most practical and commonly used method happens to be the cost method. Means determine the percentage of completion on the basis of actual cost incurred till date divided by total estimated cost. So what do you call it as? Actual cost incurred till date divided by total estimated cost. Now please remember, whenever a contractor will get into a contract, he will always have this total estimated cost. Now some of you may be having a question, sir, but sir, this cost, how can a contractor know in first year, maybe at the beginning, that this is going to be the cost involved? So this is an estimate. This is an estimate. On the basis of estimate, contractor will always say, okay, so we are not saying that he will be 100% certain about this number. Okay, or there will be 100% accuracy as around the total cost. So we are not saying that, but yes, he can always estimate that. Okay, and this estimate may also change year on year. So what does it mean? Let's suppose in the first year, his estimate was a total of 25 crore. Maybe in second year, this may change to 26 crore. Maybe in third year, this may change to 26.5 crore. This may also come down. Yeah. So this estimate is subject to revisions. And that will always happen. Why? Because it's an estimate. An estimate cannot be 100% accurate. It's always based on assumptions. It's always based on approximation. And the moment we say there is an approximation, 100% accuracy may not be possible. So that's why estimates are always subject to revisions. They are always required to be looked at. They are always required to be reassessed. So at every reporting date, what will happen? Contractor will reassess this estimated cost. Okay. Yeah. Now, there's one more principle which is interlinked to this. So let's try to understand that principle and then we'll pick up some more examples to discuss this. Yeah. All right. So now, so say there's a contract for 3 years. 1, 2, 3. Okay. Let's suppose the contract revenue is fixed. What is the amount of contract revenue? 100 crore. Yeah. So contract revenue will be signed upfront So this is something which is very, very clear to the contractor and the customer. Yes or no? But we are looking at the contractor right now. Why? Because we are required to recognize this revenue in the books of contractor. So forget about the customer right now. Okay. Now for the contractor, we understand that the amount of revenue is 100 crore. So we are not saying whether it will be recognized in 1 year, 2 year, 3 year. That we have already discussed. Okay. Now, at times, now please remember, at times it may happen that as against this total contract revenue, now please remember this 100 crore is the total contract revenue. This is the total amount for 3 years. This is not the amount for 1 year or one of the years. This is the amount for 3 years. At times, it may happen that as against this contract revenue, the contractor may be required to incur total estimated cost, which is higher than the total contract revenue. Let's suppose his total estimated cost is 105 crore, 105 crore. Okay. Now you may be thinking, sir, but why this will happen? Why will the contractor may enter into such type of contract? See, at times this may happen. Okay. Some of the strategic decisions may be taken. Maybe there was some nature of work which the contractor wanted to execute. Why? Because he strategically wanted to develop that partnership with the contractor to get some more work. Okay. Or maybe he wanted to build his credentials in that particular domain. So that's why he has taken up this project at a loss. Yeah. So now in this case, we clearly see there is a loss of 5 crore on the contract. Yes or no? Tell me everyone. In this case, very clearly, can we say this or not? There is a loss of 5 crore on the contract. Tell me. Yeah. Abhishek, in fact, has quoted the requirement of the standard around this. Very good. Yeah. So Shoaib, Pooja, Om, they are saying yes, there's a loss of 5 crore. Now the question arises that on day one, okay, on day one, contractor knows that on this contract, he will incur a loss of 5 crore. Correct? Yeah. But the point is, if you look at the accounting requirements that we have discussed so far, what does it say? If you look at the accounting requirements, what does it require? Recognize cost as and when it is incurred. Means this cost of 105 crore will be incurred over a period of 3 years. Yeah. And this will be recognized over a period of 3 years. And this revenue of 100 crore will also be recognized over a period of 3 years. So what will happen? If you go by that accounting requirement that we have just discussed, what will happen? This loss of 5 crore will be recognized over a period of 3 years. If you go by the accounting requirement that we have just discussed, is that true or not? If you look at that accounting requirement, so what will happen? This loss will get recognized over the 3 years, over a period of 3 years. Yes or no? Quickly, over to you. Yes or no? If you go by that accounting requirement, I'm saying if you go by that accounting requirement, Shoaib is saying yes. If you go by that accounting requirement, if you go by that percentage completion. So Om is saying, sir, in a way, we are saying that in that case, recognition of loss will be deferred. Yes. Actually, if you go by that accounting requirement that we have just discussed, what will happen? This loss will not get recognized in first year. So no, this loss will get recognized over a period of 3 years. over a period of 3 years, 5 crore of loss will be recognized. But the question is this prudent? Standard says we have a loss sitting in our books, but waiting to be recognized. Is that appropriate? Is that appropriate? What do you think? We have a loss sitting in our books, waiting to be recognized. Is that appropriate? Pooja says no. That is not prudent. If you go by the principle of prudence, that is not appropriate. So that's why, what should you do? Standard says that such type of loss, you will not wait for 3 years. You will recognize that upfront. The moment you get to know that on the contract, you will incur a loss. So let's not wait for the period of 3 years to get completed. Let's not defer the recognition of the loss. So therefore, what should you do? You should recognize that loss upfront. What does it mean? That in first year itself, in this particular year, you should recognize it. Now, you may have a question, but sir, at one place, we are saying that percentage completion should be followed, revenue should be spread out over a period of 3 years, cost will also be spread out over a period of 3 years, and then we are recognizing this loss upfront. Yes, so both of them will coexist. So we are not saying that percentage completion accounting requirement will not be followed. That will continue to be followed. Means revenue will be spread out over a period of 3 years. Cost will also be incurred and recognized as and when it is incurred. Over and above that, any loss is something which you will recognize immediately. Okay, so that's how this is required to be looked at. Yeah. So now what we will do is we'll just pick up one example to discuss this accounting requirement. All right, so let's look at this example. B Limited undertook a construction contract for 50 crore in April 2023. Cost of construction was initially estimated at 35 crore. The contract is to be completed in 3 years. So there's a 3 years period. So can you tell me what is the amount of profit? So there's a contract for 50 crore. Initially, cost was estimated to be 35 crore. So can you tell me what is the amount of profit as per the initial estimate? Om is saying 15 crore. Very good. Pooja is also saying 15 crore. Great. Abhishek is also saying 15 crore. Great. Now, while executing the contract, just a minute. While executing the contract, company estimated cost of completion of the contract at 53 crore. So what happened? Initially, B Limited estimated cost will be 35 crore. But subsequently, it got changed to 53 crore. So therefore, if you look at the overall arrangement, from a profit of 15 crore, what has changed? Can you tell me? From a profit of 15 crore, what has changed? Can you tell me what has changed? Over to you. What has changed? Abhishek says, now there is a loss of 3 crore. Pooja says, and company therefore will have to recognize this loss upfront. Yeah? That profit seems to have changed into a loss, but that is okay. Okay, that is the assessment of the company. We are accountants. We are just simply required to look at as to how we need to approach this. So in this case, what will you do? As per the requirements of AS7, what will you do? When it is probable that the total contract revenue will be lower than total contract costs. So there is an expected loss which should be recognized immediately. You will not wait for 3 years period. Yeah, you will not wait for 3 years period. Therefore, this foreseeable loss, this is what you call as foreseeable loss of 3 crore. This should be recognized as an expense immediately. In which year? In first year. First year means 23-24. Even though the contract will be spread over a period of 3 years, you will not wait for that. The amount of loss is determined irrespective of whether or not the work has commenced on the contract, stage of completion, amount of profit expected to arise on other contracts which are not treated as single construction contract. Means if there is any other contract but which is not a part of this contract, so we'll ignore it. Maybe there is a profit on that, maybe from the same customer, but forget about it, because we are doing accounting, we are recognizing a revenue for this particular contract, okay? Clear on this, everyone? Any questions, any doubts so far? Then we'll move further, we'll pick up some more example. Yes, any questions, any doubts? Over to you. Any questions, any doubts if you have? Tell me quickly. Malu is clear on this. Great. Abhishek is also clear. Great. What about others? Om is also clear. Great. Okay. So let's move further. Huh? Let's move further. Yes. So we'll pick up one more example here. Okay. So let's look at this example. Huh? And you need to solve this. Okay. So if you want to start solving this alongside, you can do that. But this is something which you need to do on your own. Okay. A construction contractor has a fixed price contract for rupees 9,000 to build a bridge. The initial amount of revenue agreed in the contract is 9,000. I think you will understand the initial amount of revenue. We already talked about it. So this is agreed as 9,000. Okay. The contractor's initial estimate of the contract cost is what? Rupees 8,000. So initially he is estimating the cost of the contract will be 8,000. Okay. So we are also given estimated cost. Please remember this is total estimated cost. Then we are told it will take 3 years for the construction of the bridge. So it's a contract for 3 years. It's a contract for 3 years. By the end of year 1, the contractor's estimate of contract cost has increased to 8,050. So initially, the estimated cost was 8,000. Okay, initially the estimated cost was 8,000. Now what has happened? Now this has changed to 8,050. Now this has changed to 8,050. So this cost estimate has changed. Okay. From 8,000, this has increased to 8,050 by the end of year 1. In year 2, the customer approves. Now, very, very important point. The customer approves a variation resulting in an increase in contract revenue of rupees 200. So can you tell me what was the initial what was the initial contract revenue? Tell me what was the initial contract revenue? What was the initial contract revenue? 9,000. Yes, that's what Abhishek says. Okay. Now, over and above that initial revenue, there is a variation of 200 which has arisen in year 2. It was not there in year 1. Please remember, it was not there in year 1. This has arisen in year 2, amounting to 200. And along with this, an additional estimated cost of rupees 150 has also arisen. Please remember, our cost seems to be changing year on year. Initially, it was 8,000, then it changed to 8,050, and now to this 8,050, another component of 150 seems to have got added. Okay, so another component of 150 seems to have got added. Okay, at the end of year 2, costs incurred include rupees 100 for standard material stored at the site to be used in year 3 to complete the project. Yeah. So what does it mean? If you look at the end of third year, there's a cost of rupees 100 for material, but that material has not been consumed. That is lying at the site. Okay, so one way is that you apply that material, so that material is consumed. No, this material is there at the site, but in the third year it will get consumed. It will be utilized. Okay. Now, in this case, what you are required to do is you are required to compute contract revenue for each year and contract cost for each year that you will recognize in the books of this contractor. Okay. Yeah. Over to you. Over to you. What will be the amount of revenue and costs year on year that the contractor will recognize? Over to you. So you can just let me know these amounts year by year. Huh? Year 1, what will be the contract revenue? Contract costs. Year 2, what will be the contract revenue? Contract costs. Year 3, what will be the contract revenue? Contract costs. Yes, over to you. Yes, I'll just wait for you to answer. I'm just hoping you are onto this now, everyone. Yeah, I'll just wait for you to solve and then I'll come back to the solution. Over to you quickly. Okay. I think Shoaib has started answering this. Okay, great. So Shoaib is saying 8,050 in first year, 8,100 in second year, 8,200 in third year. Okay, great. Please remember year on year costs you need to provide. Means what will be the cost for that particular year. Don't give me the accumulated numbers. Give me the number for the year. Okay, I want to see the P&L amount. Right, Shoaib? Everyone clear on this? And I'm just hoping everyone is onto this. Quickly, yeah, please confirm. Yes, quickly. Okay, Om seems to be solving this. Great. What about others? Okay, what about others? Quickly, those who have solved, they can start sharing the response. Okay, Sejal is saying 9,000. I think that was for the previous question. Okay, Archana seems to be on to this. Okay, quickly, I'm waiting for a response. Yes, quickly, start sharing your responses. I'm just hoping everyone is on to this. Quickly, please confirm, is everybody on to this? Quickly. Okay, Om seems to have shared his answer. Okay, first year he's saying revenue 950, second year revenue 700, third year revenue 600. Okay, great. Archana is saying all clear. So it's not about whether you're clear on this or not. Archana, I want you to solve and let me know the answer. What is going to be the amount of revenue and cost year on year? Waiting for a response. Quickly, please. And Om, if you can just also let me know the amount of cost to be recognized year on year. Okay, revenue you have shared, cost to be recognized year on year. And what about others? Okay, Sejal is saying first year revenue 9,000, cost 8,000. Year 2 9,000 plus 200 minus 8,050. So it's 1150. Third year, then I think Sejal says it's 9,200 less 8,050 less 100. So that's the response of Sejal. Okay, what about others? Quickly, waiting for you. Yes, quickly, huh? Quickly, still on to this? Still on to this? Okay, no worries. So seems Pooja has a question here. Yeah. So let's do one thing. Let's take a break now. In the meantime, I think because you are also supposedly taking some more time on this, let's take a break. After the break, we will get on to the solution. Okay. And in the meantime, hopefully, if you want to continue solving this, you can also solve this. Yeah. Sejal, I'll get on to the solution after the break. Yeah. So let's take a break for 10 minutes and let's meet after 10 minutes and then we'll get on to the solution. In the meantime, I can see Malu is answering this. Yeah, but no worries. I am sure you're taking some time. So let's take a break. Maybe you can utilize the break to continue the solution, or maybe after the break, we can just get on to the solution. So whichever way. Yeah. So Bhargav, I think we can take Bhargav, can we start? Okay, great. All right, so welcome back. So now let's get on to that example. I'm sure some of you have been able to solve this. I understand some of you have questions around it. Some of you have not been able to solve this, but no worries. Huh? Let's get back to that question and we'll get on to the solution now. Okay, so it's a comprehensive one which involves various aspects in relation to the contract revenue. It also involves various aspects in relation to the contract costs, and it also requires you to recognize revenue cost year on year. Yeah, so that's why I would say it's a good example for you to look at. You'll get sort of significant practice as to how this concept needs to be applied. Okay, so quickly, if you look at the numbers, so we are given the data for initial period. That means what was the contract revenue, what was the contract cost. Then at the end of year one, we are told there was a revision in the contract cost. This is the revision. Then in year two, we are told there is a revision in contract revenue and there is a further revision in contract costs. Okay. Then at the end of year two, we are told that costs and revenue, they are like, sort of whatever has been changed to that's okay. There's only one more element. What is that element? Rupees 100, which is a part of cost that is lying at the site. Okay, that has not been utilized. So let's try to understand as to how you will deal with all of these amounts one by one. I'm hoping, Sejal, you are clear on the question. Huh? Sejal, I'm hoping you're clear on the question now. Yeah, of course, I can understand you have kind of so questions around the solution that we'll look at. But I'm hoping question is clear to everyone. Quickly, please confirm. I'm hoping there is no doubt as far as understanding of the question is concerned. Quickly, please. Question is clear to everyone. Sejal, you are clear on this? Yeah. Okay, great. Yeah, so Sejal seems to be okay on this. Fine. Now let's get on to the solution. Okay, so what we'll do is we'll pick up the solution year by year. Yeah, because what you will do is because now the solution is in front of you, so you'll jump on to year two, year three. No, let's go slowly. Let's try to understand the concept, and you will also be able to understand in case your solution is not matching with what is the required solution, then where is it that you have gone wrong? Okay, which is absolutely okay. There is absolutely no problem. But let's go slowly. Let's try to understand the numbers year on year. Okay. Now, to begin with, our initial revenue was 9,000 because in year one, we are not clear what will happen in year two or year three. Okay. So in year one, what do you know? Your revenue is 9,000. And year one, what is your total contract cost? It's not 8,000. If you look at the question, it says by the end of year one, your total contract cost was 8,050. So that's why your total estimated cost will be 8,050. Okay. So this is in year one. Fine. Now, in year one, what is your actual cost incurred? That is not given to you in the question. Okay. So that is also a sort of problem for you. I can understand that. Yeah. That was the limitation of the question. So your actual cost incurred in year one is 2093. Now this part was missing. Okay, but nobody commented on this. That's your actual cost is not available to us. Was the actual cost available to you? The answer is no. Yeah. Now you may be thinking, sir, this is not computed. How did you compute 2093? See, this data is missing in that question. Okay, so you can say it's a part of that question that in the first year, what is your actual cost? 2093. Okay, so can you tell me the percentage completion in year one? How will you compute your percentage completion? Actual cost divided by total estimated cost means 2093 divided by 8050. So that's why what will you get? 26%. So in year 1, what is the percentage of work which has got completed? 26%. So that's why in year 1, what is the percentage of revenue that you can recognize? Over to you. In year 1, what is the percentage of revenue that you can recognize? Tell me quickly. 26%. Yeah, very good. Okay, so now in year 1, your total revenue was 9,000. On 9,000, if you apply 26%, what do you get? 2340. So 2340 is your revenue for year 1. And what is your cost for year 1? That is given to you, 2093. Okay, so that's why in year 1, what do you have? Profit of 247. Okay, clear on this? Now, if you look at the as at numbers or if you look at the current year numbers, these are same. Okay, in year 1. Why? Because it's only first year. Because it's only first year. So that's why you have this situation. Correct? Okay, now let's move on to year 2. In year 2, if you look at the question, in year 2, your total revenue is not 9,000. This has changed to 9,200. Can you tell me that why should you consider this variation of 200? Any reason? Why you should consider this variation of 200? Why you should not ignore this? Tell me. In year 2, you are considering a variation of 200 and thereby you are calling your total revenue to be 9,200. Can you tell me why? Why are you considering this variation of 200? Quickly, huh? Quickly, why do you consider this variation in year 2? Tell me quickly. Why do you consider? Om is saying because it's part of the revenue. See, it's correct that it's part of the revenue, but please also remember that this part of the revenue we discussed. When do you consider? When it is approved by the customer. And in this case, in year 2, this has been approved. This has been approved. Clear on this? So why are you considering this? Like Sarup mentioned, because it's been approved by the customer. Okay, because it's been approved by the customer. So that's why in year 2, what do you have? Your total contract revenue as 9,200. Okay, and up to year 2. Now please remember, I'm not saying in year 2 or during year 2. Up to year 2, your total cost incurred is what? 6,068. Means for both years, year 1 and year 2 on a combined basis, your total cost incurred is 6,068. Okay. And in year 2, what is your total estimated cost? Is it still 8,050? Tell me, in year 2, what is your total estimated cost? Is it still 8,050? Tell me. Tell me, in year 2, what is your total estimated cost? Abhishek, Malu, they are saying 8,200. Yes, in year 2, your total estimated cost has increased further. This has become 8,200. So that's why you will now consider total estimated cost of 8,200. So now let's check in year 2, what is the percentage completed? So how will you compute it? 6,068 divided by 8,200. So what do you get? 74%. 74% is the work completed till year 2. Up to year 2, your percentage work completed is 74%. Okay. Now let's apply this 74% on total revenue. On 9200, if you apply 74%, what do you get? 6808. On 9200, if you apply this 74%, what do you get? 6808. Means up to the end of year 2, your total revenue to be recognized should be 6808. And up to the end of year 2, your total cost incurred was 6068. Okay. And in the previous year, what is the amount of revenue and cost that you have already recognized? This is what you have already recognized. This is what you have already recognized. So the balance amount pertains to current year. So 6808 minus 2340. What do you get? 4468. So 4468 is the revenue for second year. Similarly, 3975 is the cost for second year. Yeah. So if you have to look at the P&L numbers, what are the P&L numbers for second year? These are the P&L numbers for second year. Please remember, these are not the P&L numbers. These are cumulative figures. Are these required to be computed? Yes, because that will become the basis for determination of percentage completion. Okay. Up to year 2, do you have any questions? Any questions up to year 2? Are you clear up to this? Sejal, are you clear? Up to year 2, do you have any questions? Over to you quickly. Any questions up to year 2? I'm waiting. Quickly, please confirm. Are you clear? Pooja is saying clear. Great. Abhishek is clear. Okay, Shoaib has a question. Shoaib is asking, but sir, cost at the end of year 2, it includes 100 of material to be used in year 3. So it should be 8100. I'll come to that point. Okay, I'll come to that point separately. Yeah. So your point is taken. I'll come to that separately. Okay. Now, let's move on to year 3. Let's move on to year 3. Now in year 3, is there any change in the amount of revenue? No, there's no change in the amount of revenue. In year 3, is there any change in the amount of total estimated cost? No, there's no change in the amount of total estimated cost. Okay, both of these are same. Same means whatever was there in year 2, that has remained same. In year 3, work is fully completed. So that's why our total cost incurred up to year 3 is what? 8200. So that's why our percentage work completion up to year 3 will be 100. And therefore in year 3, what should you do? Your total revenue up to year 3 should be 9200. Total expense up to year 3 should be 8200. And from these two numbers, if you reduce the amount recognized up to year 2, means if you deduct the revenue for year 1 and 2 from the total cumulative revenue from year 3, what do you get? 2392. Similarly, what will be your cost to be recognized for year 3? 2132. So this is your number for year 3. This is your number for year 3. Okay, so this is the amount that you will recognize for year 3. Yeah. Okay, so Sejal, I'll come to your point. I'll come to your question. Now, as regards year 2 and year 3, see, if you look at the question, it says cost incurred include rupees 100 for standard material, which is stored at the site. Which is stored at the site to be used in year 3 to complete the project. Okay, so therein what you can do is maybe you can just consider as part of year 2 cost. Why? Because it says cost incurred. Or if you want to treat it as WIP, you want to call it as inventory, so you can always take it to year 3. Yeah. Now, Sejal has a question. Sejal is asking, sir, how did you compute this 74%? No problem. Let's try to understand this. So, Sejal, tell me one thing. Are you clear on the total estimated cost at the end of year 2? Are you clear on this? As to how did you get 8200? Please confirm quickly. At the end of year 2, are you clear how did we get total estimated cost of 8200? Yes, I'm waiting for a response, Sejal. Quickly, please confirm. Are you clear? How did we get 8200 as the total estimated cost? Yes, Sejal, please confirm quickly. Huh? Okay, great. So Sejal seems to be clear on that. Great. Okay. Now, if you are clear on that, then please understand that up to the end of year 2, question says, now this data is available in the question. Up to the end of year 2, I'm not saying during year 2. At the end of year 2, your cost incurred for both the years, year 1 and 2, was 6068. Okay. Now, at the end of year 2, if your cost incurred was 6068, if you divide that by total estimated cost, 8200, what do you get? 74%. Then you get 74%. Okay. So this is how you are getting your percentage completion at the end of year 2. Please remember, you are not required to compute the percentage of work completion for the year 2. At the end of year 2, whatever is your percentage completion, you can derive that. Okay. So that's how you get 74%. Yeah. Now, Sejal, you are clear on this? Tell me. Are you clear on this? 74%? Okay, great. So see, it appears she is clear on this now. Any other query, any other doubt if you have on this? Everyone please confirm quickly. No? Everyone seems to be clear? Malu is saying, but sir, cost incurred is not given in the question, so how do we calculate? So that's why I'm saying, so this data was missing. So you can say that whenever this question will be asked, okay, so let's suppose if in the exam, you are worried, but sir, this is not available. So if in the exam, if this is asked, what will you do? In the exam, you will be given, so it will say actual cost incurred. So this data year on year will be given to you. So year 1, it will specify 2093. Up to year 2, it will specify 6068. I understand it was 6068. Yeah. And up to year 3, it will specify 100%. Okay. Now clear on this, Malu? Yeah. So this is how the information will be made available to you. Malu, now you are clear on this? I can understand your concern. So this data was missing. Okay. So this was the missing data. Abhishek is saying a similar question was asked. Okay, it's good if the similar question was asked. That's very good. And that's how you should practice. Okay. Similarly, you should practice for the questions. That's good. All right. Yeah. So I think Om has picked up a question from the study material. No worry. So let's do one thing, Om. Let's park these questions of the study material that you want to discuss maybe towards the end of the session. So what I'll do is maybe towards the end of the session, I'll keep 5 minutes. Okay. We'll keep some time for the discussion around this. All right. Yeah. So any other questions as around the thing that we have just discussed? Any other doubt if you have? Everyone, please confirm quickly. Any other question, any other doubt if you have? Any other question, doubt? Okay, so Om was saying, no, this is the question in the study material. Okay, that's very good. Huh? So again, some of the things that we are going to discuss will be picked up from the study material, not from the study material. So whichever way we can do this, huh? So it's good. Okay, and anyways, if you practice this, it's good. Okay, so that's how you should attempt the questions, or you can say similar type of questions, because these are quite comprehensive. So if you discuss this, if you practice this, that's how you will get more clarity around the concept. All right, so now moving further, let's talk about the disclosures. Now, if you look at the disclosure requirements, okay, some of the disclosure requirements which are important will be the revenue recognized during the period. Okay, method which is used to determine the contract revenue. Okay, method which is used to determine the stage of completion. So if you have any sort of WIP, etc., the policy around it. Okay, if there is any unbilled amount, that is something you need to discuss. Okay, so these are some of the disclosures one needs to look at. Yeah, so largely this is it that we had in this accounting standard 7. I would say a fairly simple standard, but at times it becomes a bit technical if you don't get the concept clarity. Okay, so happy to have your questions, your doubts before we move on to our next accounting standard. And okay, so Sejal is saying yes, more questions. Yes, sure. See, as we progress, there are more questions which are going to come up, but please understand it's more of sort of revision for us. So I would request you to maybe practice more and more questions on your own. Idea is to just make sure that each and every concept is discussed, that is sort of revised, and also we look at the questions. But of course, because the time is such, so we can't look at so many questions. See, Abhishek is asking, sir, is there any question on the survey method? See, if you look at the survey method, Abhishek, or maybe if you look at the physical verification method, if the question is asked, that will become quite simple. Okay, and there are a couple of things around it. Let me just try to explain you over here. See, if you look at this example, in this example, there is one level of complexity. I'm not saying this was complex, but I'm saying if at all the examiner will want to create a complexity, so how can he create that? By bringing in more and more calculations. Okay. And one of the complexity could be to bring in the calculation related to percentage completion. Yes or no? Yes or no? Now the point is, the moment you bring in survey method or this physical verification method, so therein this calculation goes away. So what will happen? In the question, the examiner will have to specify that in year 1 percentage was 26, year 2 percentage was 74, year 3 it was 100%. So that level of complexity will go down. Okay, so I would say that will become fairly simple for you. That will become fairly simple for you. Okay, so that sort of thing is not really required. Okay, and practically also, if you look at the companies, the methodology which they follow, that is not on the basis of all of those methods. This cost method is something which is practically applied. Okay, Shoaib has asked question, sir, can you please explain about the work certified? See, work certified is what? The work which is completed. So let's suppose if you look at this particular question, in the first year, if let's suppose contractor says 2093 is the work completed, okay, means this is the total cost which I have incurred. So what will happen? Will the customer agree on this as it is? No. So customer will also put in a person who will just make sure that each and every detail of the cost which the contractor has submitted amounting to 2093, is that correct or not? So you can say it's a sort of verification to ensure that the cost which has been reported or the cost which has been produced by the contractor is okay or not. Yeah. So that is what you call as work certification. work verification in a way to validate that whatever contractor is asking, is that okay or no. Okay, so as simple as that. That's okay. Why? Because if let's suppose as a contractor, you may want to charge me 2093, and this 2093 may involve some part of the cost, maybe 500 pertaining to the cost, which is not agreed between us. So what will happen to that cost? As a customer, I should not be paying that. Yes or no? Yeah. So that is what is technically done, or you can say practically done. But as far as your questions are concerned, you should be just looking at the actual cost which is incurred, and of course, which is of course accepted by the customer. So that's how you need to deal with the questions. Okay. Yeah. Clear on this? Sure. Anyone else? Any more questions on this? Quickly, yeah. Any more questions on this? Then we can move on to our next accounting standard if you don't have any further questions on this. Yeah. All right. So let's move on to our next topic, next accounting standard, that is AS9. Okay. I would say a very interesting standard and extremely important standard. See, why do I call this as interesting is because of a reason. It's not that it's something which is very complex. Okay, it's not that this standard is very comprehensive. No. So if you look at the requirements of this standard, hopefully you will find things to be quite simple. And this is not a very detailed, very lengthy standard. Okay. Even then, why do I call this as one of the most important standard? Because this deals with revenue recognition. Now, whenever it comes to any entity, huh, whether you talk about contractor or other than contractor, because of course for contractor AS7 is there. So I'm talking about revenue recognition in general. Revenue recognition in the books of any entity is a very important area. You can say a key item in the financial statements of any entity. So that's why its recognition becomes very important, very relevant. And this standard is something which is relevant to almost every entity. So there's no company which will not be having any sort of revenue, except for starter, of course. But eventually they will also have the revenue, maybe sooner or later. Yes or no? So that's why this standard is relevant to almost any entity that you look at, and very important. Why? Because it's dealing with an item which happens to be the key item in the financial statements of any type of entity that you get to see. Okay. Now, as far as this standard is concerned, AS9, I think we have already touched upon this aspect also, that this standard deals with the revenue recognition in respect of any entity. Okay, whichever entity that you pick up, which has to recognize revenue, which standard will that entity refer to? AS9. Except for contractors. Except for contractors in relation to construction contracts. Okay, so you can understand its applicability, that this is something which will apply to all except for that one particular category which falls under AS7. Okay, now the point is that what does it include? It includes, I would say, broadly 3 elements. Okay, so these are the 3 elements that we are going to talk about. And I would say very broadly, there are 2 things that are required to be looked at. One, that is sale of goods, and second is rendering of services. Because when it comes to the revenue recognition, what is it that the entity may be into? They may be into sale of goods, or the services, right? It could be about sale of goods or the services. Yeah. So let's try to touch upon, first of all, the meaning of revenue. So what do you mean by revenue? What do you understand by revenue? Revenue, as per the accounting standard, is the gross inflow of cash, receivables, or any other consideration arising in the normal course of business, in the course of ordinary activities of an entity, from sale of goods, rendering of services, or it could be related to interest, royalty, dividend. That part will pick up separately. Okay. Now, in this case, another point is very, very important to understand. Many a times, what you may get to see is that within an entity, there could be various departments, various divisions, various units, various branches. Okay, within an entity, those units, branches could be there. For example, say there is a company A Limited. This company has branch 1, branch 2, branch 3. Now, their operational model is such that branch 1 sells whatever it produces to branch 2. Okay, so this company is dealing, let's suppose, into a particular product. So a part of this product is manufactured in branch 1. Okay, this part then moves to branch 2. In branch 2, this is further processed. And then branch 2 sells this. Okay, there is a sale from branch 2 to branch 3. And then the final product is completed in branch 3. And branch 3 sells this to the customers. By customer, I mean to say customer outside the entity, outside A Limited. Okay. Now let's suppose during the year, B1 has sold goods worth of 10 crore to B2. B2 has sold goods worth of say 12 crore to B3. B3 has sold goods worth of 15 crore to customer. Now in this case, if one has to look at the revenue of A Limited, turnover of A Limited, tell me, over to you. What should be the turnover of A Limited? Over to you. Over to you quickly. In this case, what do you think will be the revenue turnover of A Limited? Om is saying 37 crore. Very good. So can you tell me how did you compute? Swaroop is saying 37 crore. Great. Can you tell me how are you computing this 37 crore? Om Swaroop, what about others? Quickly, huh? Very simple for you to answer quickly, waiting for a response. Quickly, Abhishek is saying sale by branch 3. So can you compute and let me know the number? Yes, quickly. Okay, Swaroop is saying 12 plus 15 plus 10. Very good. Om is saying turnover of all the branches of A to each other. Great. What about others? Quickly, Abhishek is saying 15 crore. Sejal is saying 15 crore, but then Sejal, I think, changed the answer. Sejal is saying no. I think it should be 37 crore. Okay, what about others? Okay, Sejal has also explained how this 37 crore will be derived. Great. What about others? Anyone else? Okay, Shoaib is saying 15 crore. Now, please understand, whenever it comes to the sale of the company, turnover of the company, revenue of the company, only the sale amount which is outside the company is what is recognized as revenue. Is what is recognized as revenue. Which means, in this case, what should be the revenue of the company? 15 crore. Okay, I can understand your point. You have added all of these three, 10 plus 12 plus 15, and you have made this as 37 crore, which is inappropriate, which is incorrect. Any sale which takes place within the company, that will not be considered as revenue of the company. Let's try to apply the logic. So let's suppose there is a company. Let's suppose A Limited wants to show a turnover of 100 crore. Can it do this? The answer is yes. If you go by this methodology of consideration of interdepartmental sales as the sales of the company, then what can A do? From A, B1 can sell to B2, B2 can sell to B3, then B3 can again sell to B2, B2 can again, they can just keep selling to each other during the year and they can inflate their sales. They can make it 100 crore, 500 crore, 1000 crore. Can they not do this? Tell me, will it not be possible for the company to inflate sales unnecessarily if they want to do this? Tell me. Yes, they can do this. Yes or no? Yeah. Please remember that any sale for the purposes of revenue recognition will mean sale which has taken place outside the entity. Okay, which means within the entity, if there are units, you may say, but sir, all of these units are independent of each other. They are raising invoices. They are also getting the collection. Doesn't matter. Why? Because it's part of the company. It's like companies changing pockets. Okay, so if let's suppose you have two pockets, you move your money from left pocket to right pocket. Does it mean that your money has increased or has changed? The answer is no. The answer is no. Clear on this? Everyone? Yeah? Sejal seems to be clear on this. What about others? Everyone clear on this? Yeah? Okay, great. Pooja, she is also clear. Great. Shoaib is also clear. Great. All right. So now let's talk about recognition of revenue. Okay, so one aspect around the revenue was that any interdepartmental, interdivision, all of these things should not be considered. Now, what will become the basis for recognition of revenue? Let's try to get onto that. Okay, so we'll discuss up to this stage. Then what we'll do is we'll just pick up maybe one or two small example and then I'll come to your queries. All right, so now let me just get onto that working file to discuss this. Now, how do you recognize revenue? For the revenue to be recognized, standard says one, there should be a transfer of risks and rewards which are attached to the goods, and there should be no uncertainty of collection. Collection means money to be received from the customer. There should be no uncertainty of collection, means money to be received from the customer. Okay, and what I'll do is I'll just try to pick up some examples, some small examples to discuss both of these points with you, and basis which we'll just try to understand as to how the revenue should be recognized. Okay, let's suppose there's a term, okay, very commonly you get to see a term which is called as X works. Have you heard about this term X works? Have you heard about this? Everyone quickly please confirm. Have you heard about this X works? X works, have you heard about this? Quickly, over to you. Surup says no. Okay, so X works means once the goods have moved from the factory, once the goods have moved from the factory, means X factory, X premises of the supplier, risk is transferred. Okay. So say for example, there are two parties, A Limited and B Limited. They have entered into a contract. What is the contract? A will supply goods to B Limited worth of rupees 2 crore. A will supply goods to B Limited worth of rupees 2 crore. And what is the term? Term says X works. So what would it indicate? What would it indicate? So let's try to understand. It would indicate that today, let's suppose today A has supplied goods to B Limited. Say we are on 14th of November. On 14th of November, if A has moved the goods to B Limited, goods have moved from the factory premises of A Limited. Okay. What is that date? 14th November. On 14th November, goods have moved from premises of A. Let's suppose goods have not reached the premises of B Limited. Let's suppose they will reach the premises of B Limited on 16th of November. Let's suppose they will reach the premises of B on 16th of November. Now the question is that during this period of 1 or 2 days, A doesn't possess the goods because A has dispatched the goods and B has not received the goods. B has not received the goods. So who will carry the risk? So during this period, if the goods are lost, who will carry the risk? Who will carry the risk? Yes or no? Because if A will carry the risk, then can we say the sale is completed on 14th of November? Tell me. If we say A will carry the risk, can we say the sale is completed on 14th of November? Tell me. Khushi says no. And if we say B will carry the risk, can we say sale is completed on 14th of November? If B will carry the risk, can we say that the sale is completed on 14th of November? Shoaib says yes, that's true. And X works implies the moment you get to see this X works. What does it imply? X factory means the moment goods are dispatched from the factory of A, risk of A is transferred to the customer. Risk of A is transferred to the customer. So that's why in this case, in the given arrangement, when should A recognize revenue? Tell me. In the given arrangement, when should A recognize revenue? Tell me. In the given arrangement, when should A recognize revenue? 14th November or 16th of November? Om, Abhishek, they are saying 14th November. What about others? Pooja says 14th of November. What about others? Quickly, tell me. Everyone, in this situation, Sejal says these will be goods in transit. Of course, if you look at B, it will be goods in transit. But we are looking at the revenue recognition in the books of A Limited. So the point is, can A recognize revenue? Answer is yes. Why? Because that is the term which has been agreed between the two parties. A says the moment I'll dispatch the goods, my risk is gone. So that's why A will recognize revenue on 14th of November. Clear on this, everyone? Yeah. Any questions on this? Any doubts if you have? Any questions? Any doubts? Are you clear on this? Perfect. Okay, great. So maybe what we can do is maybe you can just, because your time is sort of up. So I do not want to stretch this for you. So what we can do is if you have any questions, any doubts in relation to whatever we have discussed, maybe you can just discuss your question doubts and end our discussion. We will not, taking up anything further. We are not yet done with the revenue recognition. Please remember, this part will complete in our next session. Okay. So maybe if some of you want to just leave, you can just feel free. Yeah. But if you want to just stay around, discuss the question, you can just stay around. Thanks everyone for your time and for the wonderful participation you have shown today. Thanks so much. But happy to have your questions, any doubts that still remain. Yes, over to you. Any questions, any doubts? Okay, so Sejal, I think she has just answered this. Any questions, any doubts that you may have? Quickly, please. Any questions? Great. Thanks. Thanks, Pooja. Thanks, Abhishek. Thanks so much for your participation. Great. So it appears you don't have any questions. So maybe Bhargav, we can just close this session now. I would request everyone to make sure you revise before we meet next. So Bhargav, we can just close this session. All right. Thanks. Thanks everyone once again. Thanks so much.